Hi, everybody. Thank you all for taking the time to join us for VCLF's first edition of the Bite-Sized Business Workshop Series. Today, we'll be focusing on the loan application process with the goal of clarifying what a business lender will generally ask for from an applicant, how long an applicant can expect the process to take, and what are some of the key components that a lender focuses on when reviewing and analyzing an application. My name is Ben Green. I'm a business advisor here at Vermont Community Loan Fund, and I use he, him pronouns. Just so everybody knows, this workshop is being recorded and will be distributed to anyone interested in a few days. We'll also plan to have a question and answer session at the end of this workshop, which will not be recorded. If you do have a question during the presentation, please feel free to share it in the chat. Alternatively, you can wait until the end of the presentation and share it with the group. So I want to start off by introducing our organization for those who are not familiar with it. Vermont Community Loan Fund is a nonprofit, mission-driven community investment and financial institution. We aim to create opportunities for local business owners with the intention of fostering healthy communities and financial stability for all Vermonters. VCLF provides flexible financing to individuals and communities who have historically been excluded, both illegally and legally, from commercial lending. We primarily work with local businesses, childcare providers, community organizations, nonprofits, and affordable housing developers. VCLF was originally founded in 1987, and over the past 37 years, we've loaned out roughly $135 million to borrowers from every corner of our state, helping create or preserve almost 8,000 jobs, build or rehabilitate affordable homes for 4,750 households, and supported quality childcare programs for over 5,000 children and their families. In addition to offering flexible and patient capital, VCLF also offers free business advisory services to interested applicants and borrowers. This support helps clients overcome obstacles and tackle projects that many small business owners are intimidated by. While these services are completely optional, we have seen that they have a positive impact on client sustainability and success over time. I want to take a minute to address VCLF's loan programs, some of which are specifically tailored to different types of small business owners or different industries. Our first and probably most widely utilized program is our business loan program. This particular product is meant for businesses of all shapes, sizes, and developmental phases. The funding can be used to purchase real estate, fixed assets like vehicles or equipment, the general working capital for things like marketing and or payroll, or to restructure debt. Loans range in size from $1,000 to $350,000 for first-time borrowers. And our current base interest rate is 9%, with terms generally ranging from 5 to 20 years. The program does have a $50 application fee, and if approved, a 1% closing fee. This program, like most of our loan programs, does require collateral, which can be any asset that a business or business owner owns, inventory, or accounts receivables. One of our most widely used industry-specific loan programs is the Early Care and Learning or Child Care Loan Program. This program requires that applicants operate under the regulations of Vermont's Child Care Licensing Division. They are properly licensed themselves, and they participate or plan to participate in Vermont's Child Care Quality Recognition Program, called STARS. Loans can be used to purchase facilities, for facility renovations and improvements, or to purchase equipment and materials for the organization. The next specialty loan program listed on the page is our Sprout program, which is one of our more popular financing products for very good reasons. These loans can only go up to $60,000, but have incredibly low interest rates at 1% for the first 2 years of your loan term and 2% for the remainder of the loan term. In addition to only having 1% interest rate those first 2 years, businesses only have to make payments on their interest accrued during that time period. So for context, if a borrower were to take out a $50,000 loan, they would only have to make payments of roughly $50 per month for those first 2 years. Sprout loans are also intended to support businesses that maintain or expand the working lands of Vermont. So most eligible borrowers tend to be in the agricultural industry or are value-added producers sourcing ingredients from local producers. Funds can be used for real estate purchases, facility construction or improvement, equipment purchases, inventory purchases, or working capital. The last loan program that we have on this page is the Justice Forward Fund, which admittedly is not active right now. Despite that, the program has been approved for a second round of funding and will hopefully be available again in the coming months. The Justice Forward Fund, or the JFF, may be VCLF's most unique loan program and was specifically designed to break with traditional lending norms in the hope of reducing wealth extraction and increasing accessibility. The program is specifically meant for BIPOC small business owners and new American small business owners and offers low to no interest loans, has an expedited application process, and does not require any collateral. Our organization is still working out some of the finer details of the JFF second round. We expect it to offer loans ranging from $1,000 to $40,000. If anyone is interested in this program, please feel free to contact us, and we'd happily add you to a distribution list that will be updated with any new developments with this program, including when it relaunches. There are two other specialty loan programs that we offer that aren't listed on this page, mostly just because they couldn't fit. The first of which is our agritourism program, and the second of which is our trails program. So first, I'll touch on the agritourism loan program. For those who are not familiar with the term, agritourism is the practice of creating opportunities for on-farm experience, whether it's recreational, educational, or hospitality focused. To be eligible for an Ag-T loan, you must own and operate your own farm, provide goods or services directly to clients, and must put funding towards a project that enhances the visitor's experience. This loan program offers fixed interest rates starting at 3% and has a maximum loan amount of $50,000. That second loan program that I had already mentioned is the Trails Loan Program. So that particular product is intended for businesses that are either supporting or are part of the outdoor recreation industry and will create more opportunities for Vermonters and tourists to get outdoors. Funding from the Trails program can be used for real estate acquisitions, facility construction or improvement, equipment purchases, inventory purchases, or working capital. Loans for this program can range from $5,000 to $250,000, and our current interest rate for that program is 6%. Generally speaking, terms range from anywhere from 1 year to 10 years. So here's a rough breakdown of the phases and timeframes of the loan application process. I do really want to emphasize that these are all generalizations, and there are a number of factors that can either speed up or slow down the application process overall. Some of those factors are going to be in your hands. Stuff like the quality and level of detail of the information provided on the application can definitely speed things up or slow things down. But there are other factors that are going to be totally out of your hands, like the number of applications our loan team is currently processing. So the first step in this process is submitting your application to VCLF's loan administrators, which you can reach at admin@vclf.org. Our loan admins will confirm receipt of documents and let an applicant know if they're missing any information. Once an application is ready for review, it will be assigned to one of our loan officers who will spend time reviewing the application itself, as well as your credit report, the project proposal, the industry that you're working in, and really any other factors that might impact the long-term success of the business. The loan officers will likely follow up with an applicant to ask questions or get to know a little bit more about the business owner and their project. And during this time, they'll be writing a summary of their analysis and findings, which is presented to a loan review committee. This committee is made up of different community and board members and ultimately votes on whether or not to approve a loan request. Once an application is approved, your loan officer will let you know within a matter of hours. Our loan team will then start creating commitment and closing documents detailing the terms and conditions of the loan. And we'll also request some additional information from the applicant themselves, like a completed W-9, ACH agreement, when necessary, signed government forms, and among other things like proof of insurance. Once our loan team has the necessary documentation and information that they've requested from the applicant, they'll schedule a closing meeting to finalize the loan agreement. Once the closing is complete, funds tend to be dispersed to the bank account of the applicant's choosing within 1 to 2 business days. So here's a photo that you'll probably have a very hard time reading of our loan application. While we do have a couple of different types of loan applications, most applicants will kind of use this one standard version. Um, this application provides some useful information about the overall process and the loan itself, like what sorts of fees and interest rates a borrower can expect to pay, what a loan can be used for, what additional documents are required as part of the application process, what you should include in your business plan, et cetera, et cetera. The application itself will ask for a variety of personal and professional information as well, including basic contact info, what the loan will be used for, any potential collateral sources that the borrower may be able to offer up, as well as a personal financial statement. We are currently working on an updated version of our loan application, which we hope is going to be available soon. The intention is to make something that's a little bit easier both to understand and to fill out, and may actually even be available online. So in addition to the completed application, we are going to ask for some additional documents from the business owner. These documents are going to help our loan team get a better sense of business's history and will help inform their decision about whether or not a loan would ultimately help a business owner achieve their stated goals. There is an official list of supplemental documents required at the bottom of the first page of our loan application, but I think that the key documents include a business plan, historical financial statements, and financial projections. So we'll start with the first one. A business plan, or a successful business plan, I think, can take on many different shapes and sizes. I tend to think of them as a roadmap for any business owner, which ideally are going to be reviewed about once a year. They're an easy way to measure the success of your business, and basing that off of the goals that you've set for yourself, and the path that you want your business to follow. However, a business plan does not need to be a very long and detailed document, so long as you're able to clearly explain what it is your business is doing, how your business plans to make money, who are your ideal or targeted customers, and why your business will ultimately be successful. Ideally, your business plan will also discuss any project you're hoping to get a loan for, and can explain why that project is important for the business to either make more money or spend less money. The second important supplemental documents, or set of documents, are historical financial statements. What types and how many years of historical financials that you might be able to offer are going to depend on the business owner applying for the loan. Generally speaking, VCLF asks for 3 years of business tax returns, 3 years of personal tax returns, 3 years of profit and loss statements, and 3 years of balance sheets. However, we understand that not all businesses we're going to be working with have been in operation for 3 years. And some business owners, for one reason or another, do not have all the information we might be requesting. At the end of the day, our loan team is going to be willing to work with applicants to try and get as much information as possible. But just so you know, the more information you can offer describing the financial history of the business, the easier it's going to be for our loan officers to analyze an application. The last important supplemental document worth mentioning are the financial projections. So these projections can either be in the format of a profit and loss statement or a cash flow statement. And they should essentially be describing all the different ways you think your business will make money and spend money over the next 12 months. Again, the more details you can provide, the easier it's going to be for our loan officers to review and understand. However, if a loan officer is ever confused or would like additional information from an applicant, they will always reach out to ask for it. The reason we only ask for 1 year's worth of projections, unlike some other business lenders who may ask for 2 or even 3 years, is because we understand that at the end of the day, projections are guesses. And frankly, the further you go out with a guess, the less likely it is that your guess is going to be right. However, an educated guess that is based off of experience, research, and realistic estimates is going to be incredibly valuable for any loan officer reviewing an application. So when a VCLF loan officer is reviewing an application, they're primarily going to focus on 3 different aspects. There's the mission fit component, Does the applicant have enough collateral? And will the business be able to cash flow or pay off any loan it takes on? As an alternative lender, VCLF's mission is to provide access to capital for Vermonters who have been excluded from lending in the past. This includes women-owned businesses, veteran-owned businesses, BIPOC-owned businesses, New American-owned businesses, childcare businesses, and startups, just to name a few. Our mission is also to support Vermont communities, either by working with applicants who want to provide a good or service needed in a community, or by working with applicants who want to create more local jobs. So if your project entails either of those, that's another great benefit. Collateral is another key component for most of our loan programs. Collateral is an asset that a borrower offers up to a lender in case they cannot pay off their loan. In theory, if a borrower can't pay off their loan, a lender will then sell that collateral to try and make back any money that the borrower still owes them. VCLF as an organization is pretty flexible with what can be used as collateral, whether it's a piece of property, a vehicle, inventory, equipment, or really anything else that the borrower or business owns of value. If an applicant is using their loan to purchase an asset, like a vehicle, they can also use that new asset as part of their collateral stack. The last thing that a loan officer focuses on, although it's definitely not the least important, is whether or not a business can cash flow a loan. This basically means that on a month-to-month basis, will the business have enough money in their bank account to make regular loan payments? To assess this, our loan officers will use the financial projections that we've already talked about that an applicant will provide. They'll do some stress testing, which basically just means that they'll analyze the likelihood of the projections coming true, and if the projections don't come true, how difficult it would be for an applicant to pay back their loan. I had mentioned this earlier in the presentation, but I just wanted to reemphasize one of the more unique aspects of Vermont Community Loan Fund, which is our Business Resource Center. So our Business Resource Center provides free advisory services to business owners who are both interested in applying for a loan or who already have a loan with VCLF. Our business advisors can support you on a variety of different projects and problems that you might be facing. Which could include things like putting together a business plan or financial projections, or even filling out an application if you're interested in applying for a loan. But could also work on things with you like budgeting or bookkeeping or marketing and advertising, developing standard operating procedures, really anything it is that a business owner might be facing. Our Business Resource Center is happy to help you address it. The one caveat I will say is that our advisors are definitely considered generalists and not specialists. So there are going to be areas of expertise that we are just not comfortable dealing with, particularly legal matters and issues. If something like that ever ends up coming up, we'll always try and connect our clients with some third-party provider who might be able to support them during any endeavors that they're facing. But there are a few things that our business advisors will not work on. And I just want to emphasize, even though our Business Resource Center is not a part of the loan team and is not a part of the underwriting and analysis and even loan review process, they definitely understand what it is our loan team prioritizes when it comes to an application. So we are happy to help any client kind of navigate that application process and craft a story and project that will not only be appealing to the loan team, but will also hopefully help set the business owner up for success. And will, whether it's in applying for the loan itself or in ensuring that any project you're taking on is able to actually meet its goals in the long term. And also, as I mentioned at the top of the presentation, this is the first in VCLF's new series of online workshops that we're calling bite-sized business workshops. We hope to host new editions over the coming weeks and months, including strategically leveraging debt on March 6th, building project budgets on March 7th, and eventually discussing the difference between term loans and lines of credit and breaking down collateral. You can find the links to these events on our Eventbrite page, but we do plan to send out email invitations as well in the coming days and weeks. So thank you all for taking the time out of your busy days to join or watch this workshop. On this slide, you can find the contact information for various teams at BCLF, including our entire loan team, the Business Resource Center, and our loan administrators. Please feel free to reach out with any questions you might have or to schedule an introductory meeting. And also, please feel free to visit our website at investinvermont.com.